Hey guys, welcome back to the channel. My name is Jarrett White. I'm a local mortgage broker here in BC, and today we're diving into a topic that comes up a lot with homeowners, and that's private mortgages. Now you might be in a situation where the bank just simply isn't an option and you need something more flexible, and that's where private mortgages can come into play. But what exactly are they? When should you actually get one? And how much are they going to cost? Because that's the most important thing. Well, that's what we're going to cover in this video today, so make sure you stick around. We're going to cover all the basics. That way you have a clear picture on if a private mortgage could be right for you. Now, before I go over anything, I'd really appreciate it. Click that like button, subscribe, and ring the bell to be notified when other videos come out. It would do me a huge favor. Okay, so what is a private mortgage? Well, let's start off with the basics. A private mortgage is a mortgage given to you by either a private investor or more commonly a mortgage investment corporation. We call them MICs. Now this is different from a traditional mortgage because these private lenders are not regulated the same as traditional banks. Instead of focusing on income or credit, these private lenders are more interested in the equity you have in your home and the property's value. This makes it much easier for people with bad credit or unconventional income to qualify for a mortgage. However, the trade-off is it's going to be at a little bit higher of a cost. For an example, in BC, Canada, where I currently live, you can get a private first mortgage for anywhere between 6 and 8%. Whereas with a traditional bank, you're probably looking between 4 and 5%. Keep in mind, this video is being recorded in May of 2025, so those interest rates may change. On top of the interest rate being higher, there typically are initial fees. These fees are very commonly 1 to 2% of your entire mortgage amount that you're borrowing. Now, the good part about these private mortgages is they can give you an approval extremely fast, and they oftentimes work with borrowers that wouldn't qualify with a traditional bank. Now, you're probably wondering, well, when would I even get one of these? Well, private mortgages are typically used when traditional banks just won't cut it. Let me give you some very common examples. Let's say you need to buy a house before you have sold your current house. Now, in most cases with a normal bank, if you haven't sold your house yet, you don't even qualify for bridge financing. On top of that, if you haven't sold your home, we're required to use the mortgage and the property taxes on that current home as a debt against your qualification. And therefore, it's not like you're having to qualify for one home, you're essentially qualifying for two homes. And for most people, that's not something they can do. The private mortgage will allow you to still buy and still close on that new home even if you haven't sold your home yet. Oftentimes people might get themselves into a private mortgage when they thought they could sell their house in time, but it turns out they can't, and now they're still required to close on the new one. Now maybe you're also having credit challenges. So say you have bankruptcies in the past or consumer proposals, traditional banks are very unlikely to lend you a mortgage, whereas these private lenders, they will still consider you. Because like I said, they're much more interested in the value of the home and the amount of equity in the home. So if your down payment is large enough, or if you own the home already and your mortgage doesn't take up a large percentage of that value, they're more than happy to lend to you as long as the file makes sense. Another common situation would be that you're self-employed. Now, a lot of self-employed people, they show next to no income personally on paper. They try to either keep as much as they can in the corp, or they write their income down so their net income is showing very low for tax purposes. But when it comes to getting a mortgage, that can really hurt you. Now, there are typically better options for self-employed people, not through traditional banks, but a different tier of lending called B lending, and that's something that we specialize in as well. Now, I'd say the most common use case for a private mortgage would be for debt consolidation. Say you have a mortgage with Scotiabank, TD, CIBC, whoever, and maybe you don't qualify to pay out your credit cards or line of credits because that loan amount would be too big. Or maybe you do qualify to pay them out, but you don't want to refinance because you don't want to pay a penalty. And on top of that, maybe you have a very good interest rate with your current lender. Now in that case, what you can do is you can get a private second mortgage, which goes behind your existing mortgage, means you don't have to pay it out, no penalty, you get to keep that good rate. And the second mortgage will be just for the amount to pay off the debt. This can significantly reduce your monthly payments. And this is by far the most common situation where someone would use a private mortgage. And lastly, I would say it's pretty obvious, emergency situations is when someone will get a private mortgage. Like I mentioned earlier, if you bought a home thinking you could sell yours and you couldn't in time, that's quite a big emergency, you would end up getting a private mortgage so you can still close on the new one to avoid losing your deposit and getting sued. Another emergency would be a foreclosure, say your credit cards, your line of credits, everything's just piling up too much, you start missing mortgage payments, and eventually the bank comes knocking saying they want their entire mortgage amount back. Well, this would be a situation where instead of letting the bank just take your house and sell it, you could get a private mortgage to pay out that current mortgage, consolidate your debt all at the same time, so that way you can keep your house and save it from getting foreclosed on. So as you can see, there's many different situations where a private mortgage could be useful. It just really depends on the situation. So how much does a private mortgage actually cost, and how does their pricing work? Well, it's all going to be based off of risk, and if you understand that, you'll understand their pricing. So risk is determined by a couple different things. It's determined by where the property is located. Obviously, if the property is in some rural area where if they did need to take the home away from you because you're never making a mortgage payment, it'd be pretty hard to sell that house if the population of the town is only 100 people. Whereas if it's somewhere like Vancouver where there's over 1 million people, it'd be a lot easier to sell. So that's one thing they really keep in mind is the location, because they want to make sure that they are secure in the sense that if you are to miss the payments, they will be able to sell that house without an issue. The next thing that they base their pricing off of is the loan to value. So how much that mortgage takes up of the total value of the home. And this is probably the biggest thing the pricing is based off of. And just so you're aware, if you are borrowing under 65% of the value of your home, your pricing is going to be significantly better than if you're between 65 and 75. 75% loan to value is pretty much the highest they will go. You can sometimes stretch that to 80%, but the pricing's really not going to be in your favor. Like I mentioned before, there are going to be fees added on top of this. It's going to depend on the lender. It's going to depend on the situation. So that's something that's going to be unique to your situation. And if you're interested in a private mortgage, that's when you would want to reach out. We can have a chat. We can break down all the pricing before you actually commit to doing anything. So essentially, when it comes to pricing, what you got to understand is lower risk equals lower pricing. Lower loan to value equals lower pricing. But the best part, like I mentioned throughout this entire video, is that they do not look at credit and they do not look at income. Now, the last thing I'm going to cover is how do you know if a private mortgage is going to be right for you? Well, if you're in a situation where the bank just isn't cutting it, we can help you determine if a private mortgage is going to be right for you. Oftentimes, people come to us for private mortgages and we end up putting them with alternative lenders, which is actually one tier better. We don't always put people with a private mortgage if they can go elsewhere, but we can do an assessment. Now, the way to determine if it's right for you is if the bank isn't cutting it, that's number one. Secondly, you got to determine, do you have enough equity to even qualify with a private lender? Or if it's a purchase, do you have enough of a down payment to qualify with a private lender? Typically, on any purchases, you're going to need at least 25% down because, like I said before, they will only go 75% loan to value. And same goes for if you own a home, you need to owe less than 75% of the value of your home with your mortgage compared to your home's value. Next, do you have a clear exit strategy? This is very important to private lenders. These terms are typically only 1 to 2 years, oftentimes really only 1 year. And they want to know after that year how they're going to get their money back. Now, you can renew with them and you can switch to different ones. However, it's always good to have a strategy on how you're going to get out of the private mortgage. This can oftentimes be you plan to sell your house in the next year, or maybe you're in an income situation where you lost your job and you're currently looking for jobs, and once you get that new job, you'll be able to qualify with an alternative lender or a major bank again. Long story short, you want to have some sort of exit strategy with your mortgage broker on how you're going to get out of that private mortgage and back on track. And the last thing would be, can you actually handle the higher costs? We're going to do an assessment. We're going to let you know what the payments are, and you got to make sure that you can actually handle those payments because there's no point going into a mortgage that you know you can't even pay for. Now, but on the contrary, a lot of people that go into these private mortgages actually start paying less monthly than they do in their current situation with a major bank. Because a lot of the times, people have a lot of unsecured debt, credit cards, line of credits, car payments that we can roll all into one, and it makes it one easy low monthly payment compared to their lower interest rate mortgage plus all their higher interest rate credit cards, car payments, and line of credits. Now, if you're still unsure if a private mortgage is right for you and you want to consult with a licensed mortgage broker, we'd be happy to help. Like I mentioned, I own a mortgage company called White Ridge Mortgage here in BC. I was in the top 35 mortgage brokers under 40 years old last year in 2024. And we have very extensive experience working with these private lenders, and we know we can find the right solution for you. Now, to sum it up, private mortgages can be a great option if you don't have the credit or the income to qualify with a traditional bank. Now, they are going to come with higher costs and fees. However, they can be very quick and they can get you out of tough situations. Now, if you're unsure if this could be the right fit for you, don't hesitate to reach out. There's absolutely no strings attached. We can have a chat, we can talk about your situation, see if this is the right fit, and if not, no worries. But if so, sometimes this can be life-changing in how it can help you. But if you're just on this video to learn a little bit more about private mortgages, that's totally fine too. Please, I would really appreciate it if you click that like button, you subscribe to the channel, and you ring the bell to be notified. We're going to start posting a lot more mortgage content on this channel. We're going to go over all different types of lendings, all different types of advanced mortgage strategies to help you save tens, if not hundreds of thousands of dollars in interest over the life of your mortgage. I really hope you can follow along in the process, and thank you guys so much for watching. Talk soon.